destruction and crises of private companies as well as state-owned entities. Tonight we're focusing on state-owned entities. This year, SAA has only been able to fly due to more government guarantees. And the dirty laundry of Eskom has been aired in Parliament. So what happened to the bondholder activism of 26 started by Futuregrowth? Well, Futuregrowth is an asset management company in Cape Town that hit the headlines when it announced it would temporarily suspend lending to some SOEs. What is its stance now that the situation has arguably become worse? All right, so we kick off a series of year-end interviews to discuss. We're now joined by Futuregrowth's Chief Investment Officer, Andrew Canter, live from Cape Town for us. Thank you for being with us, Andrew. Right now, are you lending money to Transnet, to the likes of SAA, Eskom?
So at the end of August of 2016, in the light of all the news flow that was then going on, we decided to suspend lending to the SOEs that borrow money in the listed bond market. That's important. These are all companies that issue bonds in the listed market. And we did that on the basis that we would not make further loans until we could do a governance review, assess the governance of the SOEs, ensure the boards were properly structured, the committee structures were correct, there was enough independence, and they had proper processes. We followed up by analyzing and clearing Land Bank, DBSA, and IDC. All three had quite good governance, engaged with us quickly. We had a good discussion, and we cleared them. We said, we'll make loans to them again, and we started to, as has the market. Sunrail, we didn't clear, but we said we were comfortable to make further loans to them. We expect some changes in their legislation framework over time, but we've sort of said we can trade their bonds and maybe make short-term loans. As far as Transnet and Eskom, there's just been a deluge of news about these companies during 2017, and frankly, we didn't know in 2016 what we all know from 2017, right? All the stories that come out. There's just no way we can really fully analyze without doing forensic assessments of them in order to clear them. So we're not going to clear them. We don't anticipate doing that. There are continuing discussions about improvements of their governance, about particularly improvements in their reporting to the market, to the bondholders, and to the public about how they run their governance, how decisions are made, and to basically get them back to the capital markets.
Do you feel vindicated?
It was never really about vindication. I mean, we manage people's pension funds, and our job is to, and particularly as a responsible investor, is to deploy that money into sustainable enterprises with proper processes, controls, governance, and reporting, so that you know that your pensioners' money is actually going to where it should go to support economic growth. Now, clearly, you want to support your Eskoms and Transnets of the world, or your Sunrails, because they're building national infrastructure. We're talking about power and ports and transport and such. So you want to be there, and you want to be there on a long-term basis, as we always have been. So I find it sad, of course, that the news flow has been so horrible, but, you know, better to know than to not know. And now let's move into the future. Let's try and clear these companies up. Let's get better reporting. Let's get more disclosure about their governance. I suspect there'll be changes to the boards of directors, and they'll come back to the capital markets as they have for 20 years, 30 years, to borrow money to build national infrastructure.
Andrew, at the time it seemed like this was the start of something, because other companies followed suit after you, maybe nascent bondholder activism. But since then it seems to have been fizzled out. You're still supporting your own stance, but have you been supported by others in the industry, or not supported?
Look, I think it's important that we never try to speak to anybody else in the industry. Investment managers, well, first of all, they're quite a thorny bunch. Everybody wants to make their own decisions, so you can't guide people anyway. We said what we said publicly. We never spoke to any other asset managers, so that's quite important. And we wouldn't. That's called collusion. You just don't do that. But that said, I think it is true that given the news flow, the companies have had positive news flow, and I'm speaking about the larger SOEs, like some of the SOEs like Land Bank, IDC, DBSA, have done good work and gotten this story out and told the market what they're doing in terms of governance, have continued to be able to borrow money in the capital markets at reasonable prices so they can continue the developmental mission, whereas the other companies like Transnet and Eskom have really struggled to come back to the capital market and borrow money. So they're going to international DFIs and finding other sources of capital because they're not able to borrow from domestic pension funds right now. But that is a simple market decision based on the information that's been coming out through the leaks and through the press.
If everybody did follow you or spontaneously of their own accord, you could have a situation where it gets even worse for Eskom. We're already facing higher electricity prices. So this does actually affect South Africans. And like you say, these governmental agencies, huge for us all. Is your stance correct in light of all of that?
Look, and this is the real conundrum as a taxpayer of South Africa, a resident, somebody who lives here, and all of us as citizens. When we blithely talk about credit ratings downgrades, people think, well, who cares? Who are these foreigners telling us we're not a good credit? Well, we must understand what that means, and what it means for the Escoms and the Transits as these news stories come out. It's a higher cost of money. In order to compete in the world, we need efficient labor, we need innovators and entrepreneurs, and we need a reasonable cost of capital. Well, if the Japanese companies can borrow money at basically 1% interest rates for 20 years, and we have to pay 10% interest rates 20 years, you can see that's a competitive disadvantage of the world. It's a terrible thing. And likewise, if the stories of corruption and maladministration of the big SOEs keep coming out, the cost of capital of the nation goes up because the credit rating goes down, the cost of capital for those individual companies goes up. So it means, indeed, you have to build less power plants, less railroads, less rolling stock, and less roads in general. So it's really a terrible thing. And the goal here must be to improve the governance, bring the fiscus back under control, get the deficit of central government back within international metrics that allow our credit rating to start drifting back up, so we have a lower cost of money, so we can compete in the world and create jobs and have proper economic growth on a long-term basis.
Mr. Canter, I see that your criticism has seemingly gotten a little bigger. If you want to check on governments, you need a lot of information, and the JSE supplying some of that information. Tell me how it works and where you think the JSE should be upping its game.
So here's an interesting, I mean, it's a hard story to get into and to explain why the JSE in the bond market isn't as good as a JSE in equities. But let me give you a simple example. If you've got a JSE listed share, like Steinhoff, and Steinhoff, for example, were to change one of their directors, one of the board members on their board of directors, they must put out what's called a JSE news service announcement, a SENS announcement, to tell the market that they've changed one of their directors, because it's considered important information for investors to know. In the bond market, however, for a company that just issues bonds, like Eskom, for example, they could change their board, they could change any director or their entire board. They don't have to tell the market. They don't have to issue any information. Now, that's one example of the dichotomy between how bond investors are treated, and by the way, bond investors are also your pension fund. It's not like it's different from your equity investors, and how equity investors are treated. There's this dual standard about what is a public capital market, a public amenity, a safe place for investors to meet and make investments, and there's this weird structure of the bond market where there's a complete lack of transparency, very weak listing requirements and reporting standards, and it actually works deeply to the detriment of investors and pension funds. So we sit here today and you talk about the Steinhoff story. Well, the bondholders of Steinhoff right now really don't know where their position is. Their legal agreements are weak. Under the JSE, they probably can't even properly call a meeting. They probably can't appoint a trustee to act for them to engage with Steinhoff. They're scrambling around trying to find their footing because the JSE doesn't have a proper mechanism to protect investors. Unlike equities, there will be proper mechanisms for all the shareholders to come together to protect their interests and talk to each other to sort out the interest of that company. And that's what I'm trying to express about the weakness of the JSE. Right now, the JSE's rules are basically an enabler of maladministration and malpractice, and that applies to both the SOEs and to the private sector, to some of the big SOEs we've named, and to the Steinhoffs of the world.
I'm so glad you raised Steinhoff, and please explain further. As an equity on the JSE, surely there should be all these rules about transparency, which seem to have failed, or they weren't truthful. The JSE is investigating. But my final question to you is, what would you say to people who say that companies get away with murder, and the media and people like you are very critical of state-owned entities? We seem to pick and choose who we focus on.
Yeah, well, look, I mean, I don't think there's a correct analogy. I mean, the state-owned enterprises are using taxpayer money. They are accountable to us, the taxpayers, but the accountability mechanism is quite weak. There's no market mechanism to do that. Steinhoff or any other company in the JSE, the share price goes up and down every day. You can go on TV and criticize management any day of the week, and the market punishes companies. That said, when we talk about, nobody knows whether there's actual illegal activity in Steinhoff. We don't know what's going on, but if there is, there will be prosecutions, and investors will go after them. So I do think it seems like a double standard, but there's a daily mechanism for the public and the markets to punish company managements, less so of state enterprise, and certainly not, and those are listed bonds, and certainly not the state in general. You can get to vote once every 5 years, not daily. So I think that's a relevant point to make. Nobody's dismissing what's happened at Steinhoff, but keep in mind those shareholders have gotten really clobbered in their valuations. How many hundreds of billions have they lost? So believe me, there's retribution coming.
It's true, more than 200 billion last week, although the share price up today. But thank you so much for your analysis, and interesting to catch up on Futuregrowth, the first to take a stand in 2016 and stop lending to state-owned enterprises. It sounds like Eskom, Transnet, SAA, and the like still off their list. That was the Chief Investment Officer from Futuregrowth, Andrew Canter.